Hey, have you ever found yourself either jumping between too many trades out of fear you're going to miss out? Or maybe you're the kind that when fear pops its ugly head up, you sit on the sidelines, paralyzed because you're afraid you're going to make the wrong decision or wrong move. Well,
Mm,
today we're going to dive into the big question is that are those issues either over trading or under trading, two heads of this or two sides of the same coin. Hey, I'm Dennis Wilborn. I want to welcome everybody today to Trading Truths podcast. And Mike Lamothe is with us, our co-host. Mike, welcome.
Thank you so much. Always a pleasure to be here. Looking forward to getting into it.
Yeah, I mean this I think we're going to basically be able to dig in. I was really amazed as I was doing some of the research for this topic, and if people are wondering how Mike and I come up with our topics is basically we want to be challenging any real issue that is kind of an untruth or a myth about trading that we found when we first started trading destroyed our confidence, destroyed our trading, messed us up in our head, and all that type of stuff.
Mm.
And we want to dig into that so that we can share what we discovered along the way. And what really shocked me about these two topics is that the behaviors, the psychological behavior of both of them
Mhm.
behind them was almost black and white. I mean, one was just almost as the opposite of the other, but we're going to get into that shortly. So everybody hang around. And the other thing we're going to do something special this week is we're going to answer the question if Mike and I had to make money on a particular trade. It was a have to. It was a life or death situation. What stock or ETF would each of us trade? And I'm going to let Mike go first, but you're going to have to wait
Mm.
because we're going to dive into the rest of this topic right now. So, Mike, hey, let's start dissecting this. What are the you basically in your book, Trading Mind Will, you get into the psychology behind trading. And in
Mhm.
there, do you address the aspect of over trading and under trading?
Uh, it's one of the things that I think a lot of people encounter. I think that I'm pretty sure that I get into over trading, under trading, that it's touched upon, but it's the book itself is more about developing different skills. So digging into the beliefs and mindsets that are needed. So if that's something that somebody's experiencing, over trading, under trading, then yeah, that's something that would be in the book.
Okay. Well, then what about the aspect of of over trading, under trading? First, what is it? And then let's dig into what are those two aspects, and then we'll dig into what are the drivers or psychological drivers behind them.
Well, I think that the over trading is well, where people think that they need to be active in order to make money in the market, right? It's almost as if you were at any other kind of job. You're getting paid by the hour. So if I'm getting paid by the hour and I'm trying to trade, then I should be actively doing something, monitoring the market, doing research, uh, placing trades. I should be doing something to be keeping active. And so that tends to lead to over trading, trading when the edge is there or not.
Hmm. I'm just welcoming everybody over in the chat box. And so do I mean, I made the statement. I mean, that's a bold statement that, is over trading and under trading, is it really, you know, two sides of the same coin?
I think it is. I think that I think if you're doing too much or too little, it is the same, two sides of the same coin. The what we need to be doing is doing enough,
Mm,
doing the precise right amount. So, how do you know if you're doing the right amount of trading? Well, that presumes that you have some sort of an edge, some sort of a system, some sort of a plan to follow. And if
okay.
you do, then the map is clear. This is what you need to do and when and how and why. And if you're doing more than that, then that's a problem. If you're doing less than that, that's also a problem, right?
Mm,
It's like if you drove on the freeway, and the speed limit is 55. Well, if you're doing 80, that's too much. But there's also a minimum speed too, right? If you're driving 20 miles an hour on a highway, that's not good.
yeah, I get you. Clearly, you've never driven in Hawaii. No, it's
No, I got
crazy.
the shirt and everything. I haven't. You're right.
I know, no, no, because over here you'll find on the freeway, um, you'll get that one person driving the middle lane and they're going 40 miles an hour, and the speed limit is 50 60 miles an hour, and they have an aversion to speed over here in Hawaii, which is just insane. Or you'll get, or the other thing is that people don't know how to merge in their, and you might be wondering, well, what's merging have to do, well, if you don't know how to merge, I have to say it's a lot like you're not following your trading plan. Merging onto the freeway can be nice and smooth and easy, but then all of a sudden you get behind that one person who decides their idea of merging is they come to a stop in the merge lane
Mm.
and look to the left and go, "Oh, I can go now." And usually they're well, anyway, uh, poor driving techniques. One of the things as you kind of came to a point is that traders should be looking, they should be following the story of Goldilocks, right? For looking like, what's just right. Now I
Ah, yes,
realize,
yes.
I realize that sometimes that's hard, maybe challenging to do. But what is just right? You made a statement in a session we did quite some time ago, and you said a person has got to understand their capacity, or it was something along this line, their capacity to trade. In other
Mhm.
words, they could have a big, huge plan and you know, thoughts in their mind of being grandiose and trading, so you know, great through the period of time. However, if they don't have the capacity or the bandwidth to do that, they'll basically set themselves up for failure. And I think that falls into something similar where we're at right now, right? I mean, not where we're at, but what we're discussing.
Well, sure. If you're trying to take on more than you can handle, then that's no good. That's no good. I was in that boat when I was back when I was trading part time with when I was still at the day job. And I got to a point where my trading education far surpassed what I was reasonably able to execute. And I think that a lot of people fall into that category. A lot of people get uh, in. A lot of people love the market. The market is super interesting. It's a lot of fun, and so we'll
Yeah.
go out, we'll read loads of books, attend seminars, get very well educated on us on trading, and we'll become trading hobbyists. And the
Hmm.
problem with being a trading hobbyist is that it often costs a lot of money and takes a lot of time, and that's not why we got into trading in the first place. Well, we're hoping to make money trading and get more time back.
Yes.
So
Yeah.
if we're not aware of that part of it, we could start to fall into the trap of, oh, let me start doing more, get
Yeah. Yeah.
more. education, put on more trades. And I'm not trying to say that education's a bad thing. I think that education's a wonderful thing. But I think that you would have mentioned this in another episode too, of about applied
Yes. Yeah.
knowledge, right?
Yeah.
And so there's a big difference there.
Yeah. I mean, uh, in the US, yeah, maybe it's throughout the world, there is a over emphasis and overarching desire to gain more knowledge, thinking that if I just gain more knowledge, I'll be better. However, so we're strong on attaining knowledge, very weak on applying knowledge. And it's in the application of knowledge, incremental knowledge. I mean, we're talking about, it's that old adage about how do you eat the elephant, one bite at a time, is that I can read a jillion books on trading. I can read, get so filled, listen to all the audio books. They can listen to your book. They can listen to my book, Trade Your Way to Freedom. However, if there's not a mechanism by which, and this is a mechanism you have to build for yourself, or you find a mentor who will help you build this mechanism to take it from, here's what I know. Now let's turn what I know into wisdom and into how I act. Okay. And that way they take action, because I see all the time folks who they want to, however, they haven't gotten to the place of taking the steps of, I want to, therefore I will start taking these incremental steps of learning and watching the videos on YouTube. Although I, continue to, please go watch Mike and my video on YouTube because they are really good. But just watching the YouTubes on videos on YouTube is not going to give you the quality of knowledge, which I call wisdom, which comes from application. You want to take and just make a small, you want to start making some small incremental things. And, let's say one of the suggestions is, hey, make a trading plan. Well, I share freely my trading plan. That's a, trading plan on one page, share freely with people who ask for it, and I give it away. And that can be a really great starting point. And it will help simplify, because I show you 3 ways I get in, show you 4 ways I get out, and what my expectations are, and all that type of stuff, where I get in, how I get in. And so, for anybody who would want that, hey, just, put a, just leave a comment in the, on the YouTube channel or over on Spotify, and I'll make sure that we send that out to you. But that's one way that I think that, and then so dedicate yourself to, well, for the next month, it may take me, every week over the next month, because I'm still working for a living outside of trading. And I only have 15 minutes, 20 minutes, 30 minutes a day I can dedicate and schedule to learn. Therefore, I'm going to learn these rules. And I'll learn one entry at a time. And like Mark Douglas says, you only really need one entry at a time. One entry. If you perfect one entry, oftentimes you will be so far ahead of the other traders out there. It's just it's crazy. And so that's part of the thing. But what about, okay, let's dig into over trading. Okay. Should we start with over trading, or should we start with under trading? Which would you prefer?
Let's do over.
It's a do-over. Okay.
No, yeah, let's do the over trading.
Okay. Oh, I thought we were asking for a mulligan or something. No? And so, hey guys, if you have any questions out there, and please, just type them into the chat box. We're really glad you're with us, whether you're on Facebook, LinkedIn, YouTube, or X. We're really glad you're with us today. And so if you have any questions that you'd like Mike and I to jump on, please. And also, is there any trading falsehoods that you'd like us to challenge in upcoming episodes? So, okay, emotional and psychological reasons for over trading. I guess one of the first one. Let's not start with the first one that we came up with, Mike. Let's start with. We'll come back to the number one issue with that. How about if we
Mm.
go to the next one? That aspect of what the heck is revenge trading? It sounds really sexy,
Oh
though.
yeah, that's where you take a trade and it goes against you immediately. Maybe it stops you out. Then soon after stopping you out, it takes off without you, and you're like, oh man, that you know what? Time to double down.
Ah,
Right? That's
yep.
all what I think of revenge trading. Is that what comes to mind when you think of revenge trading, or do you think of it as something else?
Well, I think revenge trading is that aspect of. Normally, I see that revenge trading happens after a series of previous actions. One is the person who is prone to revenge trade usually doesn't trade any rules. They basically don't have set stop losses and that type of thing. And
Hmm.
so they wind up getting out of the trade after it becomes so painful to hold on
Mm.
that they go, oh, I can't take it anymore, and they push the button to exit the trade, right? Because they don't have a set 5%, so they may be down 15-20%. And then I think they're overwhelmed at that time by the emotions of, oh, darn it, how am I going to tell my spouse I just lost 20% of our money? And so those emotions cause us to make stupid decisions, if you will. And I jump right back into a trade because I remember doing that. I would basically uh, uh, have a losing trade. It would fall down, and I'd finally my pain threshold had been hit. I would exit the trade, and then my mind, because my mindset was so screwed up with the way I thought, I'd say, dadgummit, I am a really great technical analyst, and when I analyze this, it was supposed to turn around. Therefore, I can't be wrong. And so that fed in, my ego fed into it also. So I said, okay, great. It's going to turn around now. And so I jumped back in. And guess what? It'll repeat the same thing. But I agree with you that there's also that aspect of on the flip side of that is you get out of a trade as you should if you do have rules, and it takes off and leaves you in the dust. That
Hmm.
there's there can be a tendency, or at least a desire. Well, I'm going to jump back in a trade on this as quickly as possible because I'm not going to get left in the dust. And I'll just leave everybody with a really great adage that my mentor gave me a long time ago. He said, Dennis, be patient. The best trade of the year comes around about every 2 weeks. So be patient. So so that's mine.
Yeah,
Oh,
well,
I love this one. What
oh
about
yeah.
this? What about we talked a little bit about, I was overconfident. When I first started trading, I was so cocky. I was so overconfident. I was, because I'd been successful in a lot of other things. And one of the shocking, truthful revelation that came to me as I was learning how to do that, learning how to trade and get to be where I am now, a great trader, is the revelation that no matter how successful I'd been in any other venture, it doesn't necessarily translate over or transfer over to being successful in trading. You got to go through a complete new learning process, do your own reps and all that kind of stuff. So I was clearly overconfidence. What about that boredom or the need for excitement. Do you find in coach people you mentor that that runs, you know?
The boredom or the need for excitement?
Yeah, yeah,
Yeah.
yeah.
Yeah, that tends to be something that comes up every now and again. So, because so many of us are trading hobbyists, right? You're at the job and you end up using trading as a form of escapism, right? Like, I don't really care too much for what I'm doing. Let me just go check the market. Yeah, that sounds like a good idea. I'm doing my due diligence, checking in on things. And why are you checking in on it? Is checking in at sporadic times throughout the day part of your trading business plan? Or are you checking in because you're bored or you need some form of escape or you need to inject a little excitement into the day? Like Ed Dakota says, everybody gets what they want out of the market, right? So here it is, right there. Boredom, need for excitement. I want to circle back to something that you said before about revenge trading, but I'll let you go ahead first if you wanted to say something about boredom or need for excitement. You're muted.
Can you hear me
There you
now?
go.
Okay.
Yes.
Yeah, go ahead and hit the revenge trader, and I'll circle back to this boredom and need of excitement and share, because you hit something that what is heavens, it's still a weak spot for me. I mean, I want to let you know it's that constant need to, you know, jump on this thing to go, oh, how's the market doing? When all my orders are, I mean, there's not a doggone thing I can be doing, but at this point in life, it's become such an ingrained habit.
Oh,
So
sure. And
maybe,
and this thing is designed to get you to pick it up 100 times a day.
okay,
And
yeah,
all the apps on it are designed to get you to pick it up 100 times a day.
and so that's what I want to circle back to. But you go ahead and hit the thing on revenge train because I'm going to circle back to the question of, well, if we have the that need for a dopamine hit off of this, what steps can we take to start a new habit that'll get us out of that? So what about revenge trading? You wanted to
All
circle
right.
back.
Yeah. So revenge trading. I was just going to point out the opposite side of it, right? So you had mentioned the revenge aspect of, oh, I don't want to show my spouse a 20% loss, so let's double down, go back in. Well, the flip side of that is, oh, I'm afraid to share this type of activity with my spouse, so now I'm going to under trade and go in with
Oh.
tiny sizes, right? So you end up going in with a much smaller size, and you don't get the kind of traction to grow your account anywhere, and so you're basically stuck in neutral.
Mm. Mm. Yeah.
So I think that in uh, both cases are ruled by an element of fear,
Okay.
right? So the fear of what somebody else is going to think, and I'm getting deeper into that book that you gave me, the Awe of God.
Yeah. Yeah. Yeah.
Fantastic book. If anybody is looking for a great read, I recommend checking this one out. Dennis, thank you so much for giving me that one. But this is one of the things that I was talking about too, is where if you end up placing your fear in something else, right? Like other than God, that thing is becoming in that your primary focus, right? And so now that fear is in control of us. So fearing what the spouse might think of a 20% loss, or fearing, making the wrong move or making a revenge trade, what we should be putting in that top spot for trading goes is our plan.
Ah.
So we should
Yeah.
have a fear of not following our plan, because if we don't follow our plan, then we're going to go off course. So how do we have faith in the plan? How do we have faith in the plan? Well, what do you think about that? How do you have build faith in your plans?
Well, I think the how is one, a lot of reps.
Mm,
Okay,
okay.
a lot of reps and also back testing. As I develop my system and my strategies and all that kind of stuff, a lot of back testing and then a lot of forward testing and sticking with my objectives, making myself, it's called discipline, I guess. But anyway, making myself use my stop losses, not crying my milk, in my beer or my milk, either one, because I hit my stop loss got hit, recognizing that, my stop losses could get hit 5 or 6 times in a row and
Hmm.
still be within the parameters of my plan or my system. And that's totally normal. But that with time and enough trades, it would equal out to where I would be somewhere with a batting average of somewhere between 45 to 55 or
Okay.
60% win loss ratio, and that
So are you
um,
going on those kinds of things off of blind faith, or do you
oh
have?
heck no, this is proven things. So I had to get to the place where one I could my back testing and then my forward testing showed I could trust my system. In other words, it
Mhm.
performed as designed and even
Bingo.
and even better. The second and probably the hardest part was getting to the place of trusting myself to follow the system. So that what
Interesting.
that did was it gave me I was confident in the system. I knew the system was going to work. So my initial some of my initial fears were I know my system's going to work, but because of my past trading habits, I didn't know if I was going to be able to work. But after now 12 years of beating the market for the last 12 years on an average of 37%, I now trust both my system and I trust the guy I look at in the mirror every morning to say, to basically follow the system. And if I do stray off course, what do I get slapped by? I get slapped by losing more than I should have lost on a particular trade, but it's a wake up. And then through the process, the system also my system has a go back and a place where I practice my mastery cycle all the time, where I have to go back and review and reflect.
Mhm.
So in other words, I review and reflect after both every day and every week to see what needs to be tweaked. So hopefully that covers what does that cover what you're asking, Mike?
Yeah, yeah, I think it does. I think it does. I'm to for one follow up to that, and I know that we're kind of getting off of the original topic, but I think that this is really good. Uh, how did you start to build that faith in yourself that you were able to like? What were some of the things that you did to change?
Uh, Gosh, it's and so, Chris, you're absolutely right. Thank you for answering my. No, that's a great question. Chris Vogel, one of our members, said writing down your trades really helps to get rid of those fears. I
Mhm.
think part of the deal is it was as Chris says, that's part of it. Journaling, uh, taking time to journal,
So
making
those were
myself.
things that you weren't doing before that you started doing and led to
Yeah, as
something.
I started adding in business world, you call them best practices. I
Mhm.
started adding in some best practices. And what was interesting is if if I adopt and you think, oh, it's got to be this big major thing and major changes and all that type of stuff. It's not. I had two things I had to change. Two. Yeah, maybe three. No, anyway, but just a couple of things. One, it had to become just hardwired in that when I place a trade, that I also place the exit order to exit with either a profit or a loss. And so my stop loss was always in place. So, because that's how I blew up two accounts, by not
Yeah.
using stop losses. I mean, I blew up six-figure accounts by not following just best practice of using stop losses. The second part of that equation is I started focusing on no more than three different setups and or triggers. And so I simplified my process, and I stopped searching for, well, I kind of think it looks like it's time to get in and all that kind of stuff. And so as soon as I stopped doing that and started focusing on the mechanical, okay, then that allowed me to build confidence in my ability. And I have traded, I was counting the other day, I have had practice trades, oh gosh, probably over 3 to 4,000 simulated trades, plus another, 1,500 trades or so over the last 12 years of actual trades. So that in turn built up my ability to trust both the system and myself. It's that's how you prove yourself, right? I mean, how does an athlete prove themselves when they are trying to master something new? Is they go out and do it and find out they can't, maybe they can't do it to where, the level they would like to do it at. So they go, okay, well, let's see. And they go back and they look at the situation, make adjustments to what they're doing, and then go back and retry it again. But they're constantly getting reps on how to do it the right way. And so that's one of the things. And I think one of the things, and I shared with it last week a little bit, Mike, is I think that when people are learning to trade, they oftentimes come into let's say they come into the classroom of trading, right, with some preconceived ideas that they don't know what they don't know. And however, they think they know more than what they do, and therefore they oftentimes are very unteachable. And in martial arts, as you know, martial arts, when you're first starting, the sensei says, do exactly what I show you to do, because you have to learn the form, right? And they don't give you the option of going off script. Matter of fact, if you go off script, they boot your ass out of there. Then you say, I'm sorry, you're unteachable. Get the heck out of my dojo, right? and so same way with trading. Is a person coachable? Will they follow what the ancient trader has to, the lessons of the ancient trader, or Mara wealth, you from a mentoring standpoint? Or are they really rapidly just trying to run off and, well, I heard about this from so-and-so, and this is what I want to try over here. And so they don't even take the time to learn a winning process. And so,
right. It's like to use a dojo example, the person walks into the dojo, they want their black belt, and they're just focused on having that black belt wrapped around them, but they're not interested in doing the work that'll get them there.
Yeah, and you don't get your black belt until, and then once a person, and it may take, it may take 6 months to a year, maybe 2 years, maybe 5 years, to get to the place where you have earned the right to go off script, because by that time you become a master yourself, and then you can start experimenting. But in the meantime, if you would have followed the sensei's direction all the way around, you could have been making some good money as you learned and became a master, if that makes sense.
Yeah, absolutely.
Okay, okay, and so off my soapbox. And so have we killed, under trading? You ready to jump over to over trading?
Oh man, yeah. I think that we went so far down the squirrely path. I kind of, yeah. It's a good thing that we've got this roadmap for us. Yeah, let's get
It is.
back to over trading and the number one thing.
And so, and when all full disclosure, Mike basically said, "Hey, Dennis, let's talk about this." The untruth around more trades equal more profits. And that just happens to be the number one reason people overtrade. So, Mike, what is your experience with, more trades, more profits?
It's simply not true. It's simply not true. It depends. You need to make the right trades for your system, whatever your
Right.
system is. So there are some systems that will require many, many trades, right?
Okay.
That have maybe you have a day trading system or a scalping system, and so you'll be placing lots and lots of trades, and you're just making small amounts, like these small base hits, and you're going to be doing that all day long, and you're trying to build an account that way. And there's systems out there that do that, and if that's one of them, fantastic. If you're a swing trading system, or if you have a swing trading system, it might be able to generate the kind of returns that you want within, say, 100 trades throughout the year,
Okay. Yeah.
on average, right? Not a hard number, but on average. So if you find that you're doing way less than that or way more than that, that could be one way to start to gauge, am I over trading or am I under trading? There's
Okay.
some systems that maybe you only have 10 trades for the year,
Okay.
right?
Is
I
that
think some of the turtles have systems like that, where you're only where they would only execute just a handful of times during the year, and they're position traders.
the let's see. What do you think it is that is behind that, though? The what's behind that aspect for um are we doing under trading or over trading? Yeah. Okay. We start with over trading? No, we started with under trading. Sorry about that. Okay. I was going. And so, but for overtime, but what do you think some of the drivers are behind that? That aspect of, I mean, kind of the cause and effect type of thing, is we see the belief is if more trades are equal more profits. That's the belief, or I have to recoup my losses quickly. Those are kind of some of the drivers, or I'm missing out on opportunities. Therefore, and there's also a big one, I think, is that some people think I have to be invested 100% of the time with in a entity, in a stock, and they fail to recognize that cash is a position also. And sometimes there are times of the year where you're going to be more in cash than you are in a position. So, but still that lingering thought of, oh my gosh, I wish I was, in a position, or whatever, um, can drive them to make foolish choices.
Well, sure, especially when you have a nice trading hobby. You hop on X or you hop on YouTube and you see how somebody's up 40, 50, 100% on XYZ trade, and you're
Right.
like, "Oh man, they're crushing it. Look at what I'm doing. I'm just sitting here in cash. You know what? Screw this system. I'm gonna go do oh, what that guy's in, and they're doing well, so they just buy it, right?
Yeah. Yeah.
Because, well, that guy's doing well. And then what happens? What inevitably happens? Well, it starts to move against them, and then the out of that trade, and then onto the what the next person says, and then after that,
Mhm.
and then and the same thing. And if let's just say that this person has a system, then they're watching what a person on X or on YouTube or wherever is doing. They're placing those trades. Then their system presents them with what could be a quality trade.
Okay.
Well, now they're presented with a dilemma. Do I take that one too, or do I keep on doing what this guy's doing? Maybe I take the systems trade and I'm doing this. And then now all of a sudden, now you're over trading, and now your focus is split. Now you have one eye going this way, you have one eye going that way, and you don't see what's in front of you.
Yeah. Oh, that's good. Yeah. Yeah. So in other words, um, that's what I run in. Occasionally, I run into that with some of my members that basically they are, um, and in a way, I compliment them. That's great. You can do that, but sometimes being trying to glean information from multiple sources can oftentimes lead to confusion in action.
Oh yeah, absolutely. And because this is my experience. Uh, when I read any kind of analyst reports, most of them are extremely well written, very persuasive. And not just analyst reports, but also people that are speaking on social media platforms too, presenting information, generally well written, generally making a very strong case. So if I'm easily persuaded, then now I'm in this tug of war, right? This person says buy XYZ. That person says sell XYZ. Well, who do I listen to? I'm
Yeah, yeah,
getting more information, so I'm more knowledgeable, but I'm not able to apply this knowledge very
right,
well.
right. Well, I think that's partly why, what my mentor would always tell me is that, you know, try to turn off the noise and watch the price action, because price
Yeah.
action is king. And that's one of the ways that I choose stocks. I mean, I choose stocks by one, making sure that they have strong, strong, strong fundamentals, according to IBD, Investor Business Daily, measurement techniques. And then it's just a matter of me doing my technical analysis of buying at the right time and all that type of stuff. And uh, so that's one of the ways that I go around that, because I mean, right now I've got a situation with okay, Kathy Wood, right? Everybody knows Kathy, right?
Mhm.
Kathy had a few years ago had some gangbusters picks where a couple of her picks did exceptionally well. She got a lot of notoriety about that, right? She's probably a very lovely lady and all that kind of stuff. And uh, um, however, today it comes out. Guess what she's buying right now? Roku. Now
Roku.
Roku. Okay,
Name I haven't heard in a
ROKU.
while. Yeah,
And
yeah, I'm familiar. I own the television set, but I don't own the stock. Oh, that's a
and
good.
so
Why?
Roku,
What are you doing? Oh man, what a chart!
okay, exactly. I mean, you look at the chart, but I mean, I'd have to go over and look at and so I'm using that as an example and just sharing it with people in that, nothing against her, but she had a couple of really big winners, because one of them I think was Tesla and all that type of stuff. But she's an influencer, right? She influences people to make decisions about stocks, maybe without doing their full homework about it. And
Mhm.
and when an influencer is in the news talking about it in particular stock entity, whatever, go back and look at their body of work. What has their body of work been for the last 10 years or 5 years or 2 years? Have they been profitable? And the fact of the matter is, with her ARC fund, apparently it has not beat the S&P in a long time, and it's well underperformed. So why, knowing, when I look at it's kind of like the Lamborghini guy the Lamborghini guy uh, who has that one trade, made 1,500% on this one option trade. Well, whoop-de-doo. If a person knows anything about options, they know that that's no big deal. And it's certainly, it doesn't say anything about, well, how much do you have invested? And I'll bet you one thing, he was probably over invested in that particular trade if he made a lot on it. But what's the body of work? Okay. What were your last 10 trades? What were your last 15 trades? What was your last year's worth of, what was the performance over the last year?
Right.
Then we get into understanding, okay, what the heck was going on? So, hey, let's jump really quick, Mike. I don't think, have we covered under trading at all?
Under trading. Well, we spoke about it a little bit, yeah. Because it was,
Okay.
you'd mentioned that it's two sides of the same coin.
Yeah.
And yeah, and earlier that's when I started to talk about how the spouse might be, or somebody that's fearful that their spouse might get upset if with the 20% drawdown, that they might start under trading, right?
Okay.
And undersizing,
Okay.
so they get
So,
stuck in neutral.
well, why don't we transition over to the aspect of strategies to overcome overtrading and strategies to overcome undertrading, and then we're going to get into the big question of what stock ETF would you invest in, or would you not necessarily invest in right now, but which one would you trade if you knew your life depended on making money this week?
Mhm.
We'll tighten the noose. So, strategies to overcome overtrading. It says here, implement strict trading rules and stick to them. Does that sound about right?
That's certainly part of it. That's certainly part of it. Yeah. So it's really a shift in focus, right?
Mm,
And shifting your focus to rules and systems is one way to not overtrade or not to undertrade. You're supposed to be doing what the plan says that you should be doing, and it's more than just a trading plan. I look at it as a business plan.
yeah.
I look at the difference of it. The way that I differentiate the two: trading plan is for this particular trade. So I'm going to enter here. My stop loss is going to be here. Here's how much I'm going to risk. The business plan is the overarching. Okay, here's the types of stocks that I'm going to look at, or the types of assets that I'm going to look at. Here's how I'm going to size. Here's how I'm going to use progressive exposure. Here's how I'm going to analyze markets, etc.
Okay.
So focusing on the business plan and should be what people do, because that's how you're going to make real progress. And if you're following your business plan, part of your business plan should be when and how am I going to do post analysis? Because that
Good.
will show you, okay, maybe I should be betting a little heavier, maybe I should be betting a little lighter on this and at
Okay.
these
Great.
particular times. And that's when you make your adjustments. But if you're doing all that stuff on the fly, Monday, what is it called? Monday morning quarterbacking,
Yeah. Yeah. Yeah.
uh, that's no good. Then we just trading by the seat of your pants and you're buying silly things like Roku when it's all the way down here at
No. Yeah. Was it's at? It says it's 53.96. So,
yeah.
and
Roku's probably going to take off with the way that they were talking about it.
well,
No,
yeah. I
no,
mean,
I wouldn't. To use your phrase, I wouldn't buy it with your money.
okay, good. Yeah, neither would I. Chris basically puts in there that she's apparently good friends with Elon Musk and all that kind of stuff. That's great. And at
Okay.
the same time, and which is cool. But A couple other one is just on the under trading side, and you've already hit on a little bit, is building confidence through education and practice. We covered that extremely well today, and then start using checklists to ensure your trades are meeting the criteria, which gets back to your trade review. So you don't do it helter skelter. Do
No.
you basically schedule a time after the close on Friday to do your post-week review? I mean,
Yeah.
do you put it on your calendar?
Oh yeah, it's on the calendar. There's times that are blocked. Nothing else is going on at that time. It's there, and that's been the case for the past more than a decade.
Okay.
Uh, at this point, right? Like so, from when I started with IBD, when I went to the IBD meetups and I started to learn from those guys, I saw that they had routines, they had schedules, so I started to build one for myself that was able to work well with the day job that I had at the time, and so on the calendar. Here's when I'm going to screen. Here's when I'm going to do a post analysis. Here's where I'm going to do all of my planning. And so that time is there. So that way I know when and how I'm going to be able to operate. And
Yeah.
everything that I'm going to do trading related has to fit into those blocks. Otherwise, I can't do it. So that forces me to become efficient, and it forces me to think through, well, how am I going to be able to trade given these parameters? Does that mean that I'm going to be checking in at random times throughout the day? Well, no, because that's not the part of the plan. The part of the plan is do it at this specific time. And back then, it was all uh, after hours. So basically, Nick Darvis type trading
Yep.
in 2011.
Yeah. I mean, I think that so many okay.
Very
Come on.
patriotic today.
Well, the 4th of July is coming up, and something just happened. I don't know what happened, but we'll so yeah, Nicholas Darvis is just a great book, really fast book. You can get an audio or whatever, and take a read on that, folks, because there are so many things that you could adopt if you're a swing trader that Nicholas Darvis was doing that would help you out if you're struggling with over trading or under trading.
Mhm.
He, I think, is one of the he is the epitome of somebody who is following the Goldilocks principle of trading. He got it down to where it was just right. So, Mike, what about your stock, man? Here we go.
Yeah, if
For
I
the
had to
rubber,
pick one, I have a feeling that well, we're gonna both have the same one, but
uh,
no,
yeah,
it's not that one.
it's that one.
It's
It's
not
Roku
Roku.
right there. It's
Yeah,
getting
yeah. If I
I'm
had
gonna
to
buy it
trade
right
one
here.
stock, yeah, no, that wouldn't be it. If I had to pick one thing to trade, and I actually don't trade it as often as I probably should, but I'd go with TQQQ.
Aha.
And the reason why that one is because I do so much work on the general market.
Right.
So part of my plan is to assess general market. Then I'll run all my screens, and then that'll give me another view into the market because it's going to show me, well, what types of growth stocks are there, how are they setting up, what's the quality of these setups, etc. And then I'll look at my personal performance. So 1/3 of what I'm doing has to do with the general market, and part of the general market is the Nasdaq.
Yep.
And the TQQQ is giving me a leveraged version of the Nasdaq. So if I
Yep.
had to pick one thing, it'd be this because I'm intimately familiar with it.
And so, yeah, I agree with you wholeheartedly. TQQ is one of the ones that I would pick. I also, and I'm going to throw this at this. This is a curveball. Probably people won't expect to see this coming. Hopefully, you won't expect to see this coming. Uh, and
Don't
that
tell
is
me it's dark.
CLS, yeah, it's Roku. No. Clean Spark right now. And
Yeah.
let
Okay.
me tell you why. Just really quick. Right now, Clean Spark is stuck in a trading range. And with patience, when it gets down to this bottom part of this rating range, somewhere between 15.40 all the way down to, let's say $15, it typically reverses and bops back up to $20, right? Well, that just happens to be, and I'll just grab this really quick here, from there up to there,
Hmm.
there, that's 29%.
Okay.
And I don't try to capture all of that, but I try to capture, well, like half of it. And you can see how
Okay.
many times it's made that run. So when I find a stock that is in a trade, similar trading range, that's where I'll say, okay, we can make some really great compounding by just taking advantage. Buy it at the bottom, sell it close to the top. I don't necessarily wait for it to get all the way up to the top. No, I fudge down just a little bit, 1950 or something like that. So that is one of the entities right now. If I had to make money this week, I'd be looking at CLSK. Plus, as an option trader, it does have some really nice weekly options you can trade on it. So
Mm.
anyway, nice picks, Mike.
Yeah.
Since you took my TQQ. I mean, that was my fallback. No, I'm just kidding.
You
And,
know,
and
hanging out with
somebody's
you so much, I learned some stuff, and
what's that?
yeah, we hang out together so much. I learned quite a bit. So sorry I stole your
Uh, no,
TQQ.
I tell you, if a person is learning how to trade and they've got a smaller account, and they're just growing their principal, they say they have 2,000, 3,000, $4,000. I would encourage them to do something just like that. Don't worry about trying to find the best stock that's out there, but take something like TQQQ and
Hmm.
you'll learn something much more valuable. You will learn how to do technical analysis on when to enter, when to exit, and not have to worry about the the variables of fundamentals. So
Mm.
so what was your big takeaway today, Mike?
Ah, I would say, that whole conversation with the spouse and the 20% and the revenge trading and then getting fearful and under trading because of it. Uh, I've seen so many people. I've heard similar stories to that in within the past week.
Mm,
Various people reaching out to me on different social media platforms. So hopefully, at least a few of those people are here listening, and hopefully, this conversation helps get them on track. That well, what they should be doing is following their plan and being afraid of not following their plan.
yeah,
That's where the fear should be.
that's good. And so, and then
How about you?
now, gosh, I I I come away from it not necessarily that overtrading, undertrading being the two sides of the same coin, but as actually two extremes. However, they're bound together and pulled together, if you will, by emotions and in particularly fear. One, fear of missing out, and then the other one is fear of making a mistake. that
Hmm.
that that basically forces a person either to overtrade or stay on the sideline. And that it's and the roots of those type of emotions probably tie down to some past, I won't say trauma or anything like that, but past events in the person's life and that's how it's kind of cropping its ugly head up to impact their trading. So that's what I brought away from it. So,
all right.
Okay. Hey, folks, let us know who you want us to be interviewing in the near future. I know we've got a couple of people lined up, and you're going to be really surprised. You're not going to want to miss the next session. Again, remember, we do it the first 4 Mondays of every month. We do the trading podcast, not the Trading Truths podcast. So, Mike, thank you. And we'll chat.
Thank you as well.
We'll chat shortly. So aloha and
Aloha.
Aloha. You like Mike's Italian aloha shirt, right? There you go. It's got a Vespa on it. I mean, it's got
it does.
It's got a scooter. Anyway,
see you later.
Aloha, everybody. See ya. Hang on.